What is going on, snipers? Naeem Al-Obeidi here. I hope all of y'all are enjoying your day. Let's do our daily update for today and talk about Bitcoin's upcoming death cross. And if y'all don't know, the death cross is where the 50-day short-term moving average crosses over the 200-day long-term moving average, and it's a very bearish sign in traditional markets. However, I'm going to talk about why I think this may be a bear trap and why we may see some further upside coming from this as we start heading towards these oversold levels. So looking at the technical analysis here, we've got several different support levels here in the bottom, a resistance level right around 11,973. And what I want to talk about first and foremost is this RSI. And this is the one-day RSI. If y'all don't know what the relative strength index is, it determines whether an asset is overbought, if it's over 70, or oversold under 30. And one example of this is, you can see here, as soon as this price went down, the RSI dipped below 30, it showed it was oversold. We saw this huge spike. So that right there, just using the RSI, could have predicted that bounce back in Bitcoin's price. And you can see how we're now starting to find a little bit of support right along that 34 and that 36 RSI level, but we're still under 40. If y'all don't know, 40 is where you want to look for in terms of looking at a bearish RSI. So that's right over here. Anything over 60 would be considered a bullish RSI. So anything over 60, which we'll actually draw here in green, is a bullish RSI. So looking at this technical analysis right now, you can tell that we're still under 40. And what's interesting about that is it's also coinciding with this death cross. If this 50-day moving average, which is here in red, starts to cross down over, that means that the bears had to sell off Bitcoin extremely hard to actually create a death cross. And in my opinion, looking at the MACD as well, we'll insert that indicator here. This is the moving average convergence divergence. You can also see where the histogram determines buyers and sellers. There's not as many sellers as we saw in December, obviously, because December was a huge rally. So there was a lot more opportunity for these bears to take over and sell their positions. But right now, the bears have sold their positions. So looking at the technical analysis right now, one article that actually coincides with my philosophy of things is CoinDesk, that posted this article, Why Bitcoin's Death Cross May Be a Bear Trap. I'm not going to go over the whole article here, but it's really interesting. And they actually say here, to cut a long story short, BTC had to drop by $14,000 to push the 50-day moving average so far towards the 200-day moving average. Hence, it's likely that the bears will run out of steam by the time the actual death cross occurs. And then it backs that up by saying, no, the RSI showed oversold conditions when the death cross happened, hinting at the rally to come. And this was from a previous death cross that occurred where it was very similar, how the RSI was oversold right alongside with the death cross occurrence that eventually was a bear trap. And I think that was back in 2014. So this has happened before. And if you continue to read the article, it's really interesting. There's one part where they talk about how 2 out of 3 death crosses so far have yielded in breakouts, not reversals. So it's an interesting article to look at. But what I think is more interesting that I want y'all to pay attention to is the technical analysis here and knowing when to get your position back into Bitcoin, because people are still worried about putting their positions in. A lot of people have even exited this market because they've so-called felt betrayed that Bitcoin did not yield them Lambos and took them to the moon. But at the end of the day, you have to understand a market can only go up so much and it can only go down so much, especially when there's intrinsic value, especially something that had a $30 billion market cap and then shot up to over 800 billion and then dropped back down to 300 billion. Doesn't sound too bad, right? I mean, 300 billion from 30 billion is still a significant increase. And understand that regulations have not yet occurred. And there are a lot of things under the rug for Bitcoin. Like, for example, you can see this Mt. Gox news story here talking about how Mt. Gox is now suspected for selling more Bitcoin. If y'all don't know, they are entitled to return the capital to the holders of the Mt. Gox whole scenario that occurred in 2013 and 14. And now they have to sell their Bitcoins and pay back their old customers. And you can see at one point somebody was offered 200,000 Bitcoin. And if y'all don't know why they offer the Bitcoin, it's because if they sell a large amount like that in the market just traditionally, it will cause a huge manipulation in price. So to avoid that, and it's actually negative for the seller because it will drive the price up. And so it's good to find more of those other buyers that are willing to agree on a price for all of the coins. So in a sense, there are still things that need to come out of the rug, like the MT Gox scenario, where it just needs to kind of pass through time, and that whole situation just needs to get it just needs to pass by, in my opinion. And a lot of things need to pass by here. You know, all of these scam ICOs, things like that. It's just holding this market back from seeing its true potential. But that doesn't mean you shouldn't put a long position in the market, knowing that this is the cryptocurrency revolution. This is the technology that is going to transform the world. Having that perspective will really give you confidence, knowing that this market is still very small compared to most traditional markets. And these levels are extremely low right now. And in my opinion, these are really good steals. I personally am dollar cost averaging my way into Bitcoin as we speak. I made my first buy order today. It was a 10% allocation of my capital. And the reason I'm doing that is I'm fairly confident that if not a reversal, we're going to see at least some sort of a bounce soon. You know, we're heading towards these lower support levels. You can see here in the Fibonacci retracement, we're all the way bottomed out. If we were to actually zoom in here on a 4-hour chart, you can actually see here, we can draw another Fibonacci retracement here to get a better depiction of what's happening in current time. And you can see if we were to draw this out here and put this down to where we saw that previous support level back in January, you can see how we're about to start heading down towards this yellow Fibonacci retracement level, in which we're most likely going to see a bounce soon because we're holding ourselves on top here. I wouldn't be surprised for us to go back down to around 7,200 and then see a sharp bounce. So dollar cost averaging my position in through this point to eventually take advantage of the upside that is most likely going to occur is probably the best decision in my opinion right now. Once again, this isn't financial advice, but I'm just saying it's oversold. And you know, we went from 30 billion to 800 billion back down to 300 billion. That's not that bad. It's healthy. And I think there's a lot of further upside in this market. And looking at the coin market cap in general, you can see BTC dominance has been pretty stagnant. And I also think there's going to be a ton of opportunities here with these altcoins. You can see some of them popping here, 50% gains. Look at that. Mithril. 24% gains for Syscoin. We actually had a trade alert of that if y'all are getting our trade alerts. So you can see that there are a lot of opportunities in this market still. And I still believe that as long as we can go through all of the dirt and find the gold, the silver, the diamonds inside of this market, we're going to be set in stone for the future as long-term investors, swing traders, and day traders alike. So with that being said, y'all, this is a message of optimism, in my opinion. I do want to apologize for the Bulls Are Coming video that I posted several weeks back. I think I never had a chance to formally apologize about that. That was one missed call. I mean, we have good calls and bad calls. That was one missed call that I had, but it was because we saw such a significant breakout. And, you know, at this point, I'm fairly confident with what I'm doing in terms of a technical sense and even in a fundamental sense, knowing that regulations have pretty much been good over the past couple of weeks, and also knowing that in a technical sense we're extremely oversold. We're heading towards that bottom RSI level. I'm confident in putting more money into the market, taking advantage of these swings, and understanding that it's about the volatility, not the price. The volatility is where the money is made. It's not the price of Bitcoin. Whether Bitcoin is $20,000, $100,000, or $100, as long as it's volatile, there's opportunity in it. So hopefully this video has helped some of y'all, and with that being said, until next time, snipers out!